Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at American Resources Corp.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis of American Resources Corp. And I want to be clear, this isn't a story about, some gradual improvement.
No, not at all.
This is a story about a complete financial metamorphosis, taking a company that was really struggling in metallurgical coal and turning it into a critical minerals and defense technology play.
That's the absolute core of it, isn't it? And I think we have to start by setting the scene. I mean, just how dire things were before this big pivot.
Oh, absolutely.
If you look back to late 2023, maybe early 2024, the company was, it was essentially fighting for its life.
Yeah, they were under severe pressure. The operational costs, the cash burn.
Yeah.
It was just unsustainable.
Exactly. I was looking at the number. They ended fiscal year 2023 with, just over $1 million in cash?
Barely. $1.1 million in cash reserves. Just think about that. A company that size basically running on fumes.
And the losses really tell the story.
A net loss of $26.7 million for that year. It was, the textbook definition of a high-risk, distressed asset, just trying to survive.
That context is so important because it makes the reversal we saw in early 2025 almost hard to believe.
Right. It wasn't just a small uptick.
No, the entire narrative just changed on a dime.
Exactly. When the Q1 2025 results came out, the market was just stunned. Revenue shot up to $58.7 million.
Which is a huge year-over-year jump.
A 47% increase. That signals massive operational momentum. But, the real story wasn't even the top line. It was the efficiency.
Right, the margin expansion. Let's unpack that because that's what separates a temporary bump from a real sustainable turnaround.
Absolutely. Their adjusted EBITDA margin expanded to 27.5% in that quarter.
And for anyone less familiar, EBITDA is basically a measure of pure operating profit, right?
That's it. Earnings before interest, taxes, depreciation, and amortization. So a margin like that means for every dollar they earn, they're keeping 27.5 cents before all that other financial noise.
That's a sign of structural health.
And that efficiency, it translated very quickly to the metric everyone cares about most.
Cash flow.
Cash flow. The company shifted to positive cash generation. They reported $18.1 million in free cash flow for Q1 2025.
And that's the money left after you pay for everything, operations, new equipment, all of it.
Yes. And that $18.1 million let them move into a net cash position of $50.5 million by March.
Wait, so they went from just over $1 million in cash to $50 million in net cash?
In a single quarter. It's a powerful statement. It suggests they're now, a self-funding entity, for the moment at least.
Okay, so the legacy coal business gave them the stability to avoid disaster. But what was the actual game changer? What let them pivot to this high-tech future?
That would be the AREC Lithium initiative.
Ah, right.
This is where the story shifts from, simple mining to proprietary chemistry and technology. AREC is their IP.
Their secret sauce.
Exactly. A unique patented process to recover critical minerals, specifically lithium, from what used to be just environmental waste.
Coal ash.
Coal ash. Think about the irony. They are literally making money from the environmental liability that has plagued the coal industry for decades.
Turning a cleanup cost into a high-value asset. And the sheer scale of the feedstock they have access to is immense.
It is. They control about 11.5 million tons of these coal ash piles.
Mostly in Kentucky, right?
Primarily in eastern Kentucky. And analysts estimate that this feedstock contains over 12,000 tons of recoverable lithium. That's a significant domestic resource just sitting there.
And they proved it wasn't just a theory. They ran that pilot program.
They did, and it was a true validation point. They were able to produce lithium carbonate with a purity of over 99.5%.
And that 99.5% figure, that's the magic number, isn't it?
Yep. That is the magic number. It's massive. It marks the first time U.S.-produced lithium from coal ash met the very strict purity standards for EV batteries.
So this isn't just digging stuff up. This is high-value, battery-grade production.
Using a process nobody else has mastered here in the States.
And that success let them move into the even bigger long-term play, rare earth elements.
Right, through their subsidiary, ReElement, and this is where the whole national security angle really comes into play.
It's a huge part of the story.
The U.S. government is keenly aware that its dependence on foreign supply chains for rare earths is a critical vulnerability.
Especially for defense.
Exactly. So ReElement offers this genuine competitive moat because it focuses on purification, not just mining.
And their tech gives them a huge advantage domestically.
A massive advantage. They're basically positioned as the solution to this huge national problem as the U.S. tries to cut its reliance on places like China.
And they're not just talking about it, they're actually scaling up.
Oh yeah, they're backing it with serious physical expansion. The Noblesville refinery in Indiana is being massively expanded.
What are the projections on that?
It's projected to boost their annual production capacity by 141%.
Wow. Okay, so that expansion puts them in a prime position. But what really got the market's attention were the government connections, right? The catalysts.
The government affiliations are huge. They're the key to unlocking the next level of growth.
And the big one was that Department of Defense partnership.
The $1.4 billion U.S. defense partnership announced late in 2025.
Yes.
It's focused directly on scaling domestic rare earth magnet production.
Which are essential for advanced weapons systems. Yeah.
And a partnership like that from the DoD isn't just about revenue, it's a stamp of approval. It elevates them from a small-cap miner to a strategic national asset.
Absolutely. And it's not just contracts. There's also grant funding on the table.
A lot of it. They're a finalist in the NSF Regional Innovation Engines program.
And that could be worth.
Up to $160 million in grant funding over 10 years if they secure it.
Which would be vital for building out capacity without taking on debt or diluting shareholders.
Exactly.
Okay, so it all sounds fantastic. The tech is validated, massive government support, a quick financial turnaround. But we have to talk about the risks.
Of course. And the risks are still very much present.
The volatility alone is a major red flag for some investors. I mean, despite that great Q1 in 2025, their history is wild.
It's a whipsaw. Look at fiscal year 2024 revenue. It dropped to just $383,000 from over $11 million the year before.
That kind of swing just shows they haven't achieved any kind of stable, predictable results historically.
And that volatility is matched by continued strain on the balance sheet. Their current ratio is alarmingly low, around 0.1.
Let's translate that. A 0.1 ratio means they only have 10 cents of liquid assets for every dollar of short-term debt they owe.
That's not a comfortable margin.
It's tightrope walk.
Yeah.
And they still carry negative book equity, right?
They do, which suggests accumulated losses still outweigh their assets. So while they might be generating cash now, they're fighting a structural problem.
So it's an incredibly risky bet on future execution.
Very much so. And we should probably mention the insider activity.
The sales in November 2025.
Yeah. Several insiders reported open market sales of over 300,000 shares.
Now, executives sell for all kinds of reasons.
Of course, managing personal liquidity, but it does raise questions for the market. When you see that kind of selling against a backdrop of financial strain, it gives investors pause.
Okay, that's a critical challenge.
Yeah.
But we need to balance that with the confidence signals the market is sending.
Like the PIPE financing.
Exactly. In October 2025, they closed a $33 million PIPE financing.
And a PIPE is when sophisticated institutional investors buy a chunk of the company directly.
So that $33 million is a huge vote of confidence. These big funds are clearly buying into the long-term REE story, despite the risks.
And the market expectations reflect that. Analyst forecasts for revenue are, well, they're explosive.
What's the average projection?
The average calls for a 178.9% revenue increase in 2025.
Wow. And the best-case scenarios.
Some are calling for as high as 722% growth. The market is betting big that they execute on that Noblesville expansion.
And the stock chart itself seems to be confirming that optimism.
It does. It's in a clear technical uptrend, trading well above its 200-day exponential moving average. That signals sustained buying pressure.
So what are the analyst price targets looking like?
A consensus range is between $5 and $5.50.
Which implies pretty substantial upside from recent prices.
Somewhere between 41 and 60%. But that's all tied to successful execution of the expansion.
So if you're watching this story closely, what are the key events to look for over the next, say, 3 months?
The most immediate one is the Q4 2025 earnings release. That's expected around mid-February 2026.
And that will give us the first real look at how the late 2025 partnerships and that capital raise have impacted the balance sheet.
Exactly. And beyond that, operational updates. Any news about the Noblesville refinery ramp-up. Those are major market movers.
Right. Production milestones.
And finally, keep an eye out for news on those government grants, especially the big NSF program or any new defense contracts. Capital injections are what really fuel this story.
It's a fascinating one. I mean, American Resources Corp really represents the highest end of the risk-reward spectrum.
Hmm.
The whole thesis is built on this unique IP,
It is.
converting what was literally environmental waste, coal ash, into materials essential for batteries and defense. That IP is a massive differentiator.
It's a company that has managed a phenomenal shift from near distress to becoming a strategic national asset in, what, just over a year?
It's incredible. The big question for investors is, can they scale the tech fast enough to overcome that balance sheet strain and actually capitalize on these massive contracts?
Yeah. And if they can turn mountains of coal waste into high-purity defense magnets, I mean, what does that imply about the hidden value inside every other industrial waste product we currently just ignore?
That is certainly a thought to mull over. If you want to keep up with all the ongoing developments and future analysis on American Resources Corp, be sure to subscribe.